Hello, Tim Kerin here from Mortgage Choice in Kingsley. Today I'm going to talk about the difference between a variable rate loan and a fixed rate loan. I'm also going to talk a bit about what's happened in the market recently and what sort of options people are taking to get the best deal and also get the level of flexibility they need in a home loan. So in order to understand what a fixed rate loan is, it makes sense first to understand what a variable rate loan is. So typically at virtually every lender we have access to, a variable rate loan would be by default over a 30-year term unless you deliberately ask for a shorter term than that, and it would have an interest rate that can change whenever the bank wants to change it. And there are many reasons why a bank might want to change rates. It could be that they need their profit margins to increase, or it could be that they want to compete harder for business, or it could be that the Reserve Bank has moved rates and they're changing their own rate in response to that. So there's a few different reasons why it might happen. Typically people with variable rate loans, I guess, experience rate changes 1, 2, 3, maybe 4 times a year. Sometimes we can go for a much longer period than that without any rate changes. Sometimes it happens more frequently. It all depends on the market. But when you apply for a fixed rate loan and a variable rate loan, and you get a variable rate loan, one of the things you're agreeing to is that your repayment could change whenever the interest rate changes. One of the values in a fixed rate loan is that that's not the case, is that you know that your repayment isn't going to change for a particular period of time. So a fixed rate loan is essentially the same thing as a variable rate loan, except that the loan contract has another clause in it that says for the first X years, maybe 1, 2, 3, 4 or 5, 5 is typically the max with most lenders, your interest rate will be this and it won't change. After that, it will revert to the variable rate. So it's still a 30-year loan contract, for example, and it's still going to be on a variable rate for the majority of that period. But for the first X years, it'll be a different rate. During that fixed rate period, there are some restrictions you need to deal with and be comfortable with before going into it. So on a variable rate loan, by comparison, you can typically pay as much extra as you like without penalty, and you can access that money again via a redraw facility, again without any cost most of the time. Thirdly, you can link an offset account to a fixed rate loan with most lenders. A variable rate loan. You can link an offset account to a variable rate loan with most lenders. So typically lenders have a variable rate product that has an offset account, and then they have another variable rate product that doesn't have an offset account, and typically you can choose between the two based on the fees and what's important to you. So in summary, a variable rate loan is something that's very flexible. Pay as much extra as you like, offset as much as you like, pull the extra out again when you need to. A fixed rate loan, on the other hand, or at least the fixed period of a loan during the first few years, however long you fix for, there's typically some restrictions to all of that behaviour. So you first of all aren't allowed to pay as much extra as you want. Usually there's a restriction like 10,000 per year of extra repayments, or 5,000 per year of extra repayments, or 30,000 per fixed period of extra repayments. And if you go beyond that, the lender is able to charge you a fixed rate break cost, which essentially represents any loss they suffer as a result of you paying that fixed rate money back early. If you do pay extra anyway, whether or not you get penalised for it, depending on whether or not you break that rule, you also can't redraw that extra money during the fixed rate period. Typically lenders block access to the redraw facility during the fixed period, and then once the fixed period ends, you then have access to it again and you can redraw it. Thirdly, most lenders don't let you link an offset account to a fixed rate loan. So in summary, a fixed rate loan is quite restrictive. A variable rate loan has a lot of flexibility. At the moment, what's happened since COVID is fixed rates have dropped dramatically, and they are still significantly lower than variable rates in the case of most of my customers, but it does depend on each person's individual situation, how much deposit they have, what the purpose of the loan is, and so forth. So what we've found is with fixed rates being really low, people have decided they would prefer to fix to get a better deal, to save interest. But now they have the issue of not having the flexibility that comes with the variable rate. A lot of people deal with that by splitting the loan in two, fixing the majority so that they get the cheaper rate on the majority of the debt, and then having a smaller portion variable so that they have the flexibility they need at that higher rate on the smaller portion. So that's typically the way of dealing with it. At the moment, rates have come down to the lowest they've been in the history of our country, and that's been the case. They've been dropping well below record levels for a few years now. So what that means is a lot of people are coming to the conclusion that borrowing money works out better than paying rent. But the difference between fixed and variable is also more significant than I've ever seen it before. So splitting is a great way of dealing with that. We've seen 4 and 5 year fixed rates start to move up a little bit recently, only at a couple of lenders, but I feel like from everything I've seen lately, we are probably at the bottom of the rate cycle, and rates probably won't change much for the next little while. There's much more important things the government is doing to manage the economy and that banks are doing to manage their involvement in it than changing rates significantly at the moment. And for that reason, I think a lot of people are coming to the conclusion that fixing at these incredibly low rates is a really attractive option. I hope that helps you think about things, and let me know when you're ready for a chat about your individual situation. Thanks.